You are live.
Okay, great. So a few announcements. First off, this is really cool. Not the ugly returns on our puts right here, but it's automatically updating. So this is really neat. All you will have to do is use your open option tab, put in the expiration date, the strike, and the ETF, and it will automatically tell you the price of your ETF and the open value of your options. That's a big upgrade that we have coming out, as well as changing what do we call the palette of what we're going to be trading. So again, I think we're going to have a pretty good little opportunity to buy some stocks towards the end of summer for a relief rally into winter before, again, we understand that the problem's not easy to solve that's causing this economic downturn. So that's one update. I want to do a little more testing. Ran out of time this morning considering all the changes we made in the trade alert, but we will likely issue your fresh sheet either tonight or tomorrow. And I'm going to also get set up so I can have a link to your spreadsheet in every email so you can easily click it every day, as well as just a really straightforward tutorial A to Z of how to use the spreadsheet. So we'll have that for you guys in each update. So very neat. And again, we have optimized each tab to help us with different assets we want to potentially get into as conditions change. So that's one update. Next week, we'll do a full tutorial. Probably the next several weeks, we'll be focusing on how to fill out our spreadsheets and working together to do that. So that's one update. Second update is I did want to look at some content you were recently sent. So today I sent you several articles, all of which are critical for all of our bonus trades in the boot camp to study. So first I would watch the Bill Gates interview, which is in this link. This was in the webinar teaser today. So it goes to this video. Then after that, you have 3 guest appearances last night. So they're bringing out all the China hawks. So you got Attorney General Barr, Peter Navarro, Mike Pence, as well as Wall Street Journal showing the action against Google related to Hong Kong, which is very relevant considering what we're anticipating comes next, which is geopolitical tensions with China. And so a number of our low risk, but extremely high potential return trades are setting up. And again, these are not opportunities you get every year. These aren't even opportunities you get every decade. So this is really truly once in a lifetime opportunities that are setting up. And that's because we're dramatically changing a number of things from government debt to consumer behavior. And then the bigger picture is that China and US are having a divorce, and it's quite likely going to get ugly before we can become friends once again. We're seeing Trump on his daily, that takes up 2 hours a day just to listen to the daily task force meeting, which goes for 2 hours. And slowly but surely, they're changing their tune on China, which is good for some of the plays we have in mind. So that's some good content that you should study today or tomorrow at your earliest convenience. Next, I do want to revisit the Tuesday content I sent you. This video wasn't exactly, is Tom Sharp on there? Let's just see. Yep, Tom Sharp telling me over and over, watch the Pump podcast, watch the Pump. I've always known about him from my days in crypto, which I've actually had really good luck with over the course of time. But I've always known about him, always thought of him as what we call the Bitcoin maximalist, which usually I'm not interested in someone who's really one-minded with their trading strategy or their outlook. But what I've come to find is he does interview a lot of interesting guests. This fellow bought a ton of Bitcoin, I think at $100, but he's really more interested in the stock market and opportunities in the stock market. So excellent hour and a half video in this interview. And he really drills down on, let's see, let me get my chat box up. Oh, Karen says he was on CNBC today. Let's unmute Karen, Ryan. I'm curious to hear what he had to say. But that video is really good. I had never listened to him before, but I was truly impressed. He really broke it down. Corporations are going to have to cut costs, lay off, really rethink what's going to work in this paradigm shift we're entering, and start all over. So very few businesses are just going to automatically thrive the way they're currently orientated. And that's why he's thinking that we actually have somewhere more like a 5 to 10 year slowdown coming ahead. Karen, you have
Yes,
hey,
sir.
Karen.
Hey.
How's it going?
It's fine. Just a little bit of a pretty big headache today, so I'm having a hard time concentrating, unfortunately.
Oh, man.
Yeah, kind of unusual for me. Yeah, no, I heard the end of his rant, so I was looking for a copy of it to see if the whole thing was on. I was in between my car listening to you, and
I'll try and find one
back in the house, and I missed it. So it's not online yet, but when it is, you probably want to see it.
He was going off, huh?
Oh my gosh, yeah. Well, it was interesting because, I've heard him before. He's very interesting, but he completely slammed everything that they're doing right now, and said, about they should have just given money directly to people, not gone through these employers. And he talked about his fellow billionaires and pretty much told them, well, if they don't go out to the Hamptons this year, tough.
Yeah.
I mean, he was pretty brutal, and that's okay. Of course, he talked about bankruptcies and everything else. I mean, he made tremendous points, valid points. But I've also heard him years ago. So sometimes it's like, okay, what's your position at the moment? But today was a big one. I got text messages from friends saying, "Did you see that?" So,
wow. Okay, cool. I'll definitely try to find it.
Yeah.
Okay, great. Thank you.
You got it.
I posted an article, but there's no video yet.
Okay, great. Thanks, Ryan. So I highly recommend this video. It's an hour and a half. Very good. And he's trying to make something like a 10 times return on his couple $1 billion he has, and make it to the marks of the super elite. So he's in the elite class, but he wants to push towards the super elite, and he's trying to figure out where does that opportunity lie. Very good. Loved it. This guy really, I believe, has the best information on what's coming next in the virus, and actually trying to look down the line, not only at solutions to solve a problem, but what's developing in terms of problems. And so I do recommend this video here, where he goes over the vaccines that are being tested, but also his daily videos are very good. Yesterday, he had a video looking at, in Korea, a case study of 51 people becoming reinfected, which is very bad news. We're not supposed to be getting reinfected from the same virus in such a short time period. So it's one thing for it to mutate over the course of a year and to reinfect, like we see with the flu, and having to make these new vaccines that are slightly altered. But it's another if whatever is happening internally in the body to get cured is suddenly relapsing. So that was a good video yesterday. He puts out about a 30 to 40 minute video daily. So again, if you want to have confidence in the trades that we're doing, then you really need to be ahead of the curve on what's coming next. Because if you listen to the narrative, which is slowly changing, but the narrative has continually been first that this now is, first we had the WHO tell us it's not contagious. And then we had Trump say it's not as bad as the flu. Then we had Pence saying nobody has any risk, to now it's, hey, you need to stay inside for 14 days. Now it's 30 days. And slowly but surely the tune changes, and his tune has never changed. Oil is definitely critical for the economy. And I believe that was what really gave us more trouble than just a stock crash, was oil plummeting, and remains at low levels until it's back to 50. you know for sure that the economy is not back on track and that there's some conflicts happening. These two fellows are very, very good at explaining the pros and cons of being long or short oil in the short term, as well as their long-term outlooks. In the short terms, they both believe that there's further downside risk, but in the long term, they believe government will have to protect our energy industry so that we're not reliant on other nations, and that oil needs to make its way back up to 50 eventually. But in the short term, everywhere to store oil is getting maxed out, and there could be some substantial downside pain. Kyle Bass video, this has been going around for years. We'll cover this in great detail today. But there's really two good trades that we were looking at. One is if we have good economic policy and keep rates steady, where I like to short the Chinese currency and anticipated tariffs. So that would be to short the yuan with the futures market, which we could only do at Interactive Brokers. And so my expectation is that we're going to go through the year with interest rates rising, stock market taking off, emerging markets doing really well, as you all know. And all of a sudden, the US stock market was going up in January where the Chinese stock market was tanking. Couldn't figure out why on earth that was happening. And that's when I first got on the trail of the coronavirus. So with further research, it's become quite clear that China either did this on purpose or is taking advantage of what happened. I don't know if we'll ever know what the truth is, but I think regardless, we're going to see China say it's all our fault that the CIA brought this over. And then the US is going to point their finger and say, no, this is all your fault. You either covered it up or were messing around with things in your Wuhan lab. Now there's a paper trail that clearly shows a lot of research from Harvard University making its way to China. And that's really just the tip of the iceberg. So I think the story's far more complex than just blaming one side or another. And we know that Australia, China, US, Canada are all definitely, Oscar's comment, Spankum girl likes the wilder things. Hope you start feeling better, Karen, from Oscar. I love it. So I do think it's more complex, and who knows how long till we'll have a clue what really caused this, but I equate it to essentially a invisible atomic bomb spreading across the globe at a very slow pace. So it catches people off guard because you're expecting this sudden shock, but what you get is a slow flood. And that flood is slowly but surely making its way through society. And without a vaccine, you really rely on masks, gloves, goggles, and distancing to slow the spread, or just keeping everybody at home. No matter how you cut it, the economy is going to be hampered and handicapped for the foreseeable future. So Bill Gates was just saying 18 months would be lucky. And if you do look at the history of we don't even know the origin of a virus. They're starting to think it comes from outer space. So Japan has this crazy mission where they have these big things floating around outer space right now, trying to collect matter in hopes that they can find out if there's really viruses coming in from other planets. So that's crazy. It's also so small. It's really beyond our technology to really truly understand them. And again, so let's go. The play we're going to be looking at today is one which Jim Rogers, great investor, big China expert, lives in Singapore, left long ago. He expects China ditches Hong Kong and moves their stock market to Shanghai. And that's really what we're hoping for with the trade we're going to look at today, is absolutely just abandoning Hong Kong because it becomes too expensive. And if they repeg, that could be a good profit, but really it's if they completely abandon Hong Kong, which I think would potentially happen if it lost its special status, which allows it to raise capital and really act as a intermediary for China to raise money for its different corporations, which again, you can't audit. So there's a number of sanctions I potentially see US placing, one of which would be revoking Hong Kong's special status, and the second of which would be either restricting or outlawing investment into Chinese securities, because again, we can't meet those auditing regulations that US companies face. Now, that is true for most ADR products or most ETFs hitting into other countries, but most countries, they will let you go audit companies, and it's not protected by Chinese law, which in the Chinese cases, they'll create a short report summary, and then you have to just trust that it's accurate. Okay, next, to really understand how big this problem is, you have to take some time to dive into the science. I never thought I'd be spending so many hours trying to understand virology or epidemiology. This is a good video. It's basics. They call it 101. It's a good overview of just how they work, so you can understand how we're going to fight it and what this process looks like. So once you realize that 18 months is hopeful thinking for a vaccine, you can begin to understand how long of a down period we're likely entering into. So it took them $1.5 trillion to buy a month of time on the stock market. They can't keep printing that much money for that long. And we haven't even begun to see the impacts and the ramifications of the slowdown we've just had for the last 2 weeks, much less what I expect will be for the next 60 plus days. Oh, Oscar says Boris Johnson's out of the ICU. That's good news for the UK. So glad to hear that. Will he come back angry at China? I wouldn't be surprised. This is another interesting article. This guy is just a science geek. In this article, what's interesting is, he goes over that we really don't understand viruses, where they come from. We know there's many more viruses than there are any other living, and virus is not living, but it to a degree acts like a living species. There's just so many of them. We don't know where they come from. We don't really understand how they work. And what's interesting is that for the last century, every pandemic has been during a solar maximum. So solar maximum means there's extra waves of sunlight, and apparently his hypothesis with this is that extra waves is going to push viruses out of the atmosphere, which who would have guessed that there's hundreds of trillions of viruses floating in the upper atmosphere. Now, UV light usually kills these viruses, but they've found that if they collect onto carbon molecules or dust, that can protect them. And so most pandemics throughout history have occurred at solar maximums, okay? Not at solar minimums. The last two have occurred at solar minimums, which is when they'd be less likely with our historical data. So is this just unlucky, or perhaps these caused from humans creating too much population, too much pollution, and doing too much bioengineering and manipulation? So my best guess is that the Wuhan lab and other labs like it are doing a combination of bioengineering and simply just culturing viruses and screening for novel viruses. So you take a bat who holds all these viruses, then you start taking that and giving it to other animals until you get zoonosis, which allows it to leap from one animal to another. And then so now you're going to have a virus that's has a history of being able to jump from one species to another. Then you sit there and screen it for viruses that we've never seen, so mutations that are novel, and then breed those and breed those and breed those. You could have a whole treasure chest of nasty bioweapons. So that's one very possible explanation of the current one that's ripping through society. Or it's just simply so much pollution and population density encroaching on areas where there's high risk of catching these, and you got it. So one way or another, probably doesn't matter necessarily, as it does look that the outcome is, again, that U.S. going to blame this on China and place sanctions on China, which will help, again, sell its debt and continue to try to drag them down. Oscar says, just read where Boris Johnson is out of ICU. It says, no Chinese food for you. Too funny. And then don't forget, China closed the, they did a lockdown January 2nd for the rich communist kids at the Wuhan military school. And then they did a free potluck for 40,000 families out in the open right before they decided to warn society of this. So it does look like they weren't negligent. They just literally wanted to spread it. So I believe this is the news flow that's going to be beneficial to our strategy in general. So the boot camp study materials are very good for understanding all of our trading setups right now. Also at the bottom of that, you can get to module 3, which is what we're going to skim through today, the Hong Kong Forex trade. So if the dollar was strong and we thought that the Chinese were just going to not do phase 1 correctly or not agree to phase 2, I would have preferred to short the Chinese currency in the futures market. So I was telling us to expect that as the next trade. Then we all got surprised. Now, of course, we were on top of it before most, but if this was done deliberately by Russia and China, it worked. They knocked our stock market down immediately. They've forced our Federal Reserve to devalue our currency. So that's really our best asset is the dollar. And that's really what's at risk and what I believe is the end game of all this. That would actually make me want to do the opposite trade on the Chinese currency. However, knowing the way the US operates, they're not likely to just sit back. We have a very aggressive military, and I do anticipate to start off lots of financial sanctions in every way, shape, and form to punish China. So I think we'll be outlawing investments into their ADR products. So that's where your FXI put option can hit a huge gain. Massive, massive potential on that. Could go to 0, then you get your strike minus the premium. So we'll be turning, what is that, $1 into 32. So a 3,100% potential return on that trade. The Hong Kong trade, if they just depeg it and let it devalue slightly, we might make 30 to 50%, but if they were maybe 100%, just depends on what the heck they decided to peg it to. But if they were to just ditch Hong Kong because everybody's selling their overpriced real estate and trying to convert out of the Hong Kong dollar into US dollars and not wanting Chinese currency, and then that's when we get the maximum potential return, which is upwards of just under 10,000% return. Now, what's so attractive about this trade is the low risk. It's the sort of trade you might sit on it for months and you're just going to eat away a tiny, tiny swap cost. And then one day, and we could be watching Hong Kong melt down with no action. It's just staying put. And then one day it snaps. And that's when you wake up with the big return on this. Now, could they strengthen the Hong Kong dollar against the US dollar? I don't think so. I don't think so. It's possible, but I believe that's the least likely outcome. Either they keep it strong pegged to the dollar and we just sit there losing the swap cost. They repeg to the Chinese currency at a lower conversion rate to help offset the cost and just try to mitigate the disaster, or they completely abandon it. So that's really the three. So in terms of risk, I'm looking at really around 1 to 1.5% total risk in these bets against China. So we have about 1%, just over 1% on the FXI trade. And I'm going to recommend just about the same risk on this trade. Okay, so I'm going to look at some of the news flow and then we'll jump into the trade. So really this was this propaganda from Hu Jihing, Chinese communist fellow, just sitting here mocking America, just mocking for the last several months. And so Washington constantly attacks the CPC, but the system established by the CPC has saved numerous lives this time, while tens of thousands are predicted to die under the US democratic system. It shows that the US needs to learn from each other with China instead of only smearing Beijing. Long view, 3-month outlook for equities, 41% think crushed because of earnings and data. I'm in that camp. JP Morgan's out pitching that, hey, we're about to get to the peak next week, and it's downhill from there. Although Italy had an extreme lockdown. The only places that are working are having extreme military enforced lockdowns. We're nowhere near that level in the US. So I don't think we're anywhere near the peak, unfortunately. Unemployment rocketing in Canada. Just think of all the industries that are going to be hurt from this. Bill Gates said there's probably not going to be big gatherings again until there's a vaccine. And we're going to have digital certificates to indicate who's been cured and safe to enter the workforce. So if you don't have that digital certificate, you're going to be essentially not able to use public transit. You're not going to be able to travel. You're not going to be able to go into any commercial space. A lot of people don't want to be tagged and tracked. So it's going to be a big topic coming up. Movie theater, just think about it. Anywhere where you are in a crowded space, pretty much wiped off the map until a vaccine comes out. WeWork has stopped paying rent, multiple locations. 30% of renters didn't pay April apartment rent. So those are probably the worst off groups. Wait till the better off people start figuring out how to defer payments. Jobless claims skyrocketing. Now, this is just the beginning. This is just the first 3 weeks. Jobless claims. So I do anticipate many small businesses going completely under and unemployment rocketing much higher until people find new ways. Bill Gates crosses the digital Rubicon, says mass gatherings may not return without global vaccine. Also, he's talking about that digital certificate. Jim Bianco, note the Treasury, taxpayers really buying all this stuff via SPVs, special purpose vehicles, and will backstop all losses. The Fed is just providing the financing with printed money. You're buying it. So again, this is all acceleration of debt growth, which is very good for our positions. The Fed just threw another kitchen sink at the markets, another 2.3 trillion in buying, 500 billion for the states for their government local debt, buying junk bonds now, which is just ridiculous. Buying junk ETFs, HYG, buying PPP and CARES loans. So that's the unemployment packages and the small business loans, and expanding existing special purpose vehicles. So we can see 2009, at the end of the crisis, we made it to not even to this level. We're starting the crisis out at worse shape than the full brunt of the last crisis. So it just gives you a feeling for how massive this downturn is going to become. Kyle Bass, US allows Google Internet project to advance only if Hong Kong is cut out. Hong Kong has become a failed state and the world has begun treating it as such. So some parts of Hong Kong are at $10,000 a square foot. And the general theme here is that you get a good thing going in a country, and the government and real estate markets take advantage of that. So rent goes up, government debt goes up, and eventually you make it so expensive that the businesses there want to get out of Dodge. So Hong Kong has achieved that. Last big country to do this was Japan. At one point, Tokyo was worth more than all of California. Not the case today. U.S. Attorney General Barr, China is a very serious threat to the U.S. Okay, so if you watched that interview last night, you can get the details of that. Ecuador is about as bad as it can get. Bodies stuffed in cardboard boxes, 500% food price inflation, mass unemployment. weak stimulus. So emerging markets are just going to be cratering, applying pressure to for people to buy the dollar. Again, good for bonds, bad for stocks. And the poorer the country, the worse they're going to have ability to deal with the sick and also keep the poor from mingling and rioting and wanting to work because they're starving. So I believe the death count, unfortunately, is going to really shock people in the coming 60 days. And even if we can get it under control in the US, which I don't think we're going to see any reprieve for at least 30 days, I'd be hopeful to see it flatline. So the same deaths per day in 30 days, if we're lucky. We'll probably need some emerging bank holidays soon. No way in hell I would leave my cash in a bank without FDIC insurance. So again, just pointing out, also feel bad for dollar-linked economies like Ecuador, Belize, Hong Kong, Cuba, who need a weaker, not stronger currency. Also, the average income for many Chinese is $13,000 a year. How are they going to consume all of their own production? The Chinese economy is heavily built on exports and more affluent consumers, similar to Japan 1980s. So we're seeing manufacturing get out of China. That's going to be another big push. Bring it home. The economic divorce between China and the US economies in the next 2 to 7 years is going to be very messy, as in slashing your ex's tires and filing a restraining order messy, as in a sad country song messy. Funny. Now, of course, we do have some corporations who are pro-China. So we see Walmart is expanding $3 billion to build into Wuhan. Volatility, what is volatility? It's lots of trading and no liquidity. So you get big price moves. Volatility is still elevated. And I believe we're going to see it pop above 100 before this mess as a short-term lull. Secretary Pompeo, during tough times, real friends stick together. U.S. is thankful of Taiwan for donating 2 million face masks. There's a lot of stuff coming in from China where they're pointing out that the masks have holes in them. We've seen lots of propaganda, whether it's true or not, that they're trying to send out faulty products to everyone that are trying to fight this invisible war. Okay, James DePore, in every bear market, there comes a time when those that are sitting on big unrealized losses are celebrating more than those that have smaller losses and more cash. That's us right now, right? Hu Jihin, those Westerners who hate China should think about it. China didn't participate in any war in the past 30 years. Which Western country didn't? China also reshaped people's lives with fast economic growth. Isn't it a good thing? Don't demonize a peaceful China. So if they had warned us in December, that would have been one thing. But they're telling us it doesn't spread person to person in January, while they locked down their private school and threw a huge, massive party right before the highest travel period in China, which is their New Year. So it does look like they did everything they could to deploy this on the world. Okay, international KS. This is going to sound extremely simple, but if the market closes strong tomorrow, that could be a sign towards real sentiment shift. Buyers looking to hold into long weekend says something to me in this current environment after the strong bounce. Not agreeing with that one. Stephen Henrik, a lot of your bears are pissed because they may be overextended. So again, put options are the risky way to bet down. TLT call options is the safe way. So we have a much larger risk factor in the bond market than we do betting down in stocks, because if you get these sort of wild swings up, then you can have unrealized losses in your puts that you have to hold on to, like we have currently. Central banker walks into a casino to play blackjack, loses every hand, but doubles down on each bet. Croupier says, aren't you worried about running out of chips? Central bank says, no, I make my own chips and I keep playing until I own the casino. Okay, Peter Schiff, the national debt just passed 24 trillion, up 4 trillion since real Donald Trump took office. He'll add more debt in 4 years than Bush did in 8 if reelected. He'll add more debt in 8 years than Bush and Obama did in 16. Instead of draining the swamp, he is draining the nation. So that's a very interesting point. And so considering his who he's going to be fighting against, Biden, and Biden's direct ties to China, leads me to believe that this will be the centerpiece of his campaigning this year. So everything's really lining up perfectly for our short Chinese plays. Karen points out that we have a defense of Taiwan. Yeah, so we're trying to protect as many little territories around China as possible as they try to do the opposite, to slowly expand their border, take over surrounding territories. Okay, Trump, 450,000 protective suits landed in Dallas, Texas. Now, interesting enough, there's a lot of reports coming out that the government is seizing supplies from hospitals, and then it's unclear where they're going to. So we're hearing lots of reports that equipment's being hoarded by the government, but we're not figuring out where exactly that equipment's landing. Also, the delays to get the money out to the labor force seem to be taking forever. And the lockdown, they tell you one thing, and then once you get near that lockdown, it gets extended. So there's some very questionable moves happening by the government, but that is nice to see that someone's getting something here. The Fed minutes dropped yesterday. I haven't read them yet. Missing from the Fed minutes, and it's funny, his interview today is like, well, the Fed likes to make slow, gradual moves. Nothing slow about what they've done in the last month, which is essentially create a $6 trillion line of credit, while the government promised 2.2 trillion, and now we're probably coming with another 2 trillion in infrastructure. Trump could reopen the country in phases, maybe ahead of schedule. That absolutely cannot happen. The only way this works is you have to kill the virus where it stands today, keep everyone extremely isolated. So the risk is you're really just going to spread it to your family. And I've seen, seems like from the anecdotal evidence I have, if you go to a random group of people, about half the people will get it and half won't. Now, we've seen some cases where that percentage is much higher. But if you keep people isolated for not a week, not 2 weeks, not 30 days, but more like 60 days, you could truly reset the clock to ground zero. And then if you rolled out extreme testing and monitoring and get everybody wearing masks, we would be able to keep operations running, to keep the economy making some money, not as much money as we had been making, but making some money so we don't all starve, and keep this from overwhelming the hospital system. So that's really what I expect, is that we're going to open up not until June, and perhaps really bad areas could be delayed beyond that. But I really don't think that we can open up in the smaller areas because it's so highly contagious that it spreads like wildfire. And if you look at the grand scheme of things, less than 1% of the population has contracted it at best. And really, the more people who've contracted it, the better. That means we're closer to the so-called end of the tunnel where we can see light. In fact, we're not even in the tunnel yet. We just took the first step. So I don't believe this is the case whatsoever. Okay, unemployment's just skyrocketing. We've got lots of vaccines being developed, but again, we're in the dark ages of trying to fight viruses. They're so small. Yeah. James Wee says having part of the country open is like having a peeing section in a swimming pool. Oh, that's great. That's exactly what it's like. So, I imagine the world's on fire, but it's only 1% on fire. If we do a 60-day lockdown, we'll be back to, instead of 1 out of 100 being infected, be maybe 1 out of 100,000 are now infected. But it grows so fast. So that gives us time to get a vaccine, and it allows us to put on a lot better safety precautions. So we need really masks for the whole world. We need everybody protecting their eyes. We need everybody still staying apart. And you got to realize your mask now becomes the contaminant. So you got to be really careful about handling. So it's not a cure-all fix, but it will definitely help. So we got to pay close attention. Do they just let everybody back open into the economy and just let it start spreading rapidly, or do they take proper precautions? Unfortunately, either solution, we still end up with a 2-year downturn here in terms of economic output. So if they open up early in, let's say, May, and there's no masks, then that's going to accelerate the next disaster. So it might give us a big stock rally. Everybody's happy, but then it's, within 2-3 months, we're back to where we're at today. If they wait till June and release everybody back out with masks, well, we've done more economic destruction and we're going to have less economic output, but we slow the spread of the virus. So we'll play the market accordingly. Google banned Zoom software from company computers over security concerns because of China, interesting enough. Haven't really dug into that yet. This video is hilarious. If you go to my feed, this cop is just absolutely haywire about kids still being out past 9. And so we're really not doing what it takes to get the same result China did. So their administration's pitching us that, hey, look at China, they're back to work. You're going to be fine. We're going to have peak problems next week, literally. And we're not doing anything like what China did. And I watched it day by day. They literally welded entire apartments shut, and you either survived or you died. And that was that. He's talking about grabbing your kids by the balls and make them stay inside. There's people dying out here. This is where you go to get masks in China, and they're not letting foreigners buy masks. And look at the precautions they're still taking. So lots of space. Everyone has a mask. The employees are wearing gloves. So this is the new future. This is how you can contain it. And even that's not completely containing it. Barry, next Thursday, we're going to do the spreadsheet. Today, we're going to do the Hong Kong trade. So right now we're looking at all the news flow and we're going to release your new spreadsheet tomorrow morning. So I'm finalizing the test, but it's working really nicely. Okay, this is the first day of the lifted lockdowns in Wuhan. This is right in front of Huawei. And again, we have these people who are collapsing in the streets. This is what really was frightening, was people just collapsing all over the place out of nowhere. So it's starting to happen again. So we'll see if China has a huge resurgence. Now, of course, they hide all the data, so it's hard to, we just get anecdotal data from China. We don't really have any real data to look at. But if we saw South Korea or Taiwan, Hong Kong, Italy, Spain, once they try to get out of their lockdowns, if we saw that reemerge, that would be another good leading indicator for us that we have trouble ahead. Okay, and I'm almost done with the news. We'll jump into the trade. Many people believe that the world will not go back to what it used to be, even after the pandemic ends. What has changed exactly? It's that the trust has completely gone while the hatred has soared. But it is elites in Washington, not the virus, that have brought this change. Okay, once we open our great country, and it will be sooner rather than later. Of course, he's been saying this every day, and it continues to get extended. The horror of this invisible enemy, except for those that sadly lost a family member or friend, must be quickly forgotten. Our economy will boom. So remember, the virus, once you have it, will live in your body for the rest of your life. It's just because of your antibodies that you can keep it in check. So with some viruses, they can come back and get you in a different form years later when your immune system drops. So that's one. Two, I've been seeing a lot of data that this virus has multiple mechanisms for getting into your cell. So right now, all they talk about is ACE2 receptor, but it may actually have 4 different strategies for penetrating the cell, which also is interesting is we're seeing younger people, and this is from Chinese data, so it's many people are not creating antibodies after recovering. So they took a sample of, I believe, 2,000 people with small symptoms and looked at them after they'd recovered. And a huge chunk of them had very few antibodies or none. So somehow they're able to beat the virus with a different mechanism than which a vaccine would work for. So does that mean a vaccine wouldn't work for a younger crowd? So that's a risk. And also we're seeing people get reinfected. So that's another huge risk. If people are getting reinfected from the same virus months later, weeks later, another big bad piece of news for us, hoping that we can be over this anytime soon. So right now, hopeful that in 18 months we can get a vaccine to the world and that it'll actually work. So the economy is going to recover in the second half of the year. I think we're going to have a big head fake. We're going to do this lockdown, crash stock market, open back the economy with masks, hopefully, but it's still going to come back at a slow pace because so many business models are going to be really wiped off the planet here until there's a vaccine. So really, the vaccine is critical here. Flattening the curve. Well, we're not flattening anything. We're having exponential growth of deaths, and they can't test everybody fast enough. So I ignore how many open cases there are. They're so slammed that really watch the death count. As soon as the death count stops growing exponentially and flatlines for 30 days, that's when I believe the health experts will start to give the green light to open back the economy. And that's really going to be the catalyst to buy stocks at some point around there. This is in Wuhan. So again, we get these anecdotal propaganda videos sneaking out of there where they're secretly. So the government in China has created a system where you're punished if you report any cases. In fact, if you report a case, your county remains in lockdown. So you're incentivized to not report cases. Otherwise, you have to stay at home and then you starve. So that's really why China has such ridiculously low data coming out, or is the incentive for that. I'm still dumbstruck by how people think we're going back to business as usual later this week when schools are closing for the year, checks aren't getting to consumers, and businesses are under the best outcome 4 weeks away from lifting most lockdowns. So again, I'd say we're like 8 weeks away. And we haven't really done a real lockdown yet, so it could be greater than 8 weeks. I don't believe the health experts are going to give the green light until that death count flatlines for a considerable period. And we have enough masks for everyone. So that's going to, is school ever going to reopen? Are the kids going to wear masks? Are they going to sit 6 feet away from one another? What's going to happen at recess and lunch? Because trying to teach them from school, from home, is just insanity. It's hard to keep these kids in line when they're in person and a arm's length away from being scolded. China officially reported no new deaths from the Wuhan virus, but come to think of it, China hasn't officially reported any deaths from Tiananmen Square incident as of yet. Maybe it's just a lag in reporting. So he's just being cynical there with what was believed to be thousands of Chinese killed during their protests. And this is potentially a bigger problem. I'd rather stay unemployed than risk my life. Grocery store workers strike. So why work if you can get free money? So companies are under a lot of stress here. Definitely not bullish for stocks. Okay, so that's enough news to get a picture for what's happening. And that takes us back through the tweets I've saved yesterday. Now, again, if you ever want to see what I'm retweeting, then just follow my Twitter account, which is generates income is our tag. Okay, let's look at the picture on Hong Kong. Okay, so this trade was made famous by Kyle Bass. I think, gosh, he's been pushing this for quite some time. He made perhaps $500 million in the subprime crisis, nailed that one. He's identified Hong Kong as the next big short. This is before this chaos ensued. He's been public about it since around 2017. But he was wrong about the Japanese currency crashing. Japan decided to protect their currency and bond market and let their stock and real estate market go. And they remain the third largest economy in the world, although India is on pace to take that over. Will China make the same moves as Japan, or does China have different ambitions? So I believe China actually doesn't want to take, so Japanese basically took a step down and consolidated what they believe was their best asset for the future. China really wants to become the leader on par with the US, and they want to expand their territory and really capture that half of the hemisphere. So they may take different actions than Japan. Japan allowed its real estate and stock market to suffer since 1990. The government now owns something like 2/3 of their stock market. They're the most indebted nation relative to GDP. And they're a huge buyer of US equities. So these are one of the big players buying our treasuries and stocks for that matter. Probably one of the big sellers of treasuries to try to stop the pain that they were having in their equity portfolio, which is massive. So again, Japan was having similar headlines that they're going to be the leader of the world and this and that. The real estate market went to extreme valuations. And then that all came falling apart. Real estate got too expensive, debt got too loaded, labor costs got too high, and companies began to get out of Japan and find cheaper places to operate. And this became the prick in the bubble for Japan. China's concern appears to be funding the Belt and Road Initiative and expanding territory. So that really does appear to be their goal. And to keep this massive population working. So it goes hand in hand with their Belt and Road Initiative. So what's China going to defend if they have stress? Are they going to let their real estate market crash? Are they going to protect their currency? Are they going to protect the stock market, job market? I'm leaning towards they're going to try to protect their stock market, job market. But again, that's an easy market for the US to attack, is their stock market. How do we attack their stock market? Two ways. We cut off capital flows to products like FXI, which are currently funneling out billions and billions of dollars through different ETFs. There's dozens and dozens of different index products that just funnel money without the investor even knowing what's happening and sending it over to China, who again is out there doing everything they can to take advantage, steal our technology. And then, of course, the big threat is that China acts as a single company. So they take all of the money of China and then laser focus it into a sector they want to dominate. And individual companies can't come close to competing. So it's really a huge risk that China could blow out any industry they want by putting all of their resources towards it. So I do believe US will have to prevent that. They can't really crash the real estate market because that's just completely internal. They can't really affect the currency market beyond tariffs, which China tends to devalue to offset cost tariffs. We can hurt their job market and stock market. So if we get all the manufacturers out of China and we crash their stock market, that will be a pretty nasty blow to China. So how do we do that? We move manufacturing out of China, 1. 2, we outlaw investment flows or restrict investment flows to Chinese ADR products. And then 3, we shut down Hong Kong. That's where they raise most of the money for their stock market. So that's where the Hong Kong trade comes up, really attractive. Hong Kong dollar is pegged to the US dollar, but its economy is tied to China. This is a bet that Hong Kong runs low on US dollars, causing a bank run. Okay, here's their foreign exchange and their money supply. Their M2 supply is 1.47 trillion, but their reserve is $430 billion. So they only have a 30% reserve. And this was a while back. We'll have to see how bad it's become. Hong Kong has been in a recession for quite some time. So the chaos continues to ensue in Hong Kong. And I would dare to bet that this has been helped by the US government. So if everybody dumps their Hong Kong dollars and converts it into US dollars, they would run out of money quickly and have to start liquidating assets. So if we start seeing everybody realize the real estate bubble in Hong Kong's over, and they start selling off the tremendous value of real estate, this country is bankrupt in no time, or this territory. It's not even a country. So that's really the play. And can China try to backstop it and protect it? Sure, but really their value for Hong Kong is to raise money from the outside of China. And so if it loses that value, it's a hard investment for China to swallow. And again, we can see they continue to grow the money supply as they lose their reserve. And that's really the big pick, the big play here. They're short $1 trillion. So if Hong Kongers start selling stocks, houses, bonds, converting out of the Hong Kong dollar to US dollars, that's what we want, as it could cause them to go bankrupt. Now, Hong Kong is owned by China, but they have special rules, I believe, until for the next 20 years or so, which allows them some abilities to raise capital and take advantage of world markets to raise money for their country. Also, China running out of is another benefit to our play. So again, they have been liquidating treasuries as they print. And so forever they'd kept reserves up with money and supply increases. But as of really 2017 or so, they've just kept it a flat 3 trillion and continue to print. Hey, Scott, how's it going, buddy? Okay, so again, our best outcome is China just straight up ditches Hong Kong and lets it completely dissolve its currency and moves their financial center to Shanghai, which Jim Rogers believes will happen even if we don't put all these sanctions on them. The other option is they could refigure a conversion rate against the Chinese currency, and quite likely they would not keep it at a 7-to-1 ratio, which is currently the conversion rate against the dollar. They may have to devalue that exchange rate to reduce the cost, because if they have to cover $1 trillion in outstanding Hong Kong dollars, and plus all the liquidations of real estate, they could quickly wipe out this complete $3 trillion reserve. And their currency is extremely overvalued as it stands. So again, China quite likely wants to spin their currency and turn it into a reserve currency. So they're really incentivized to keep its strength and keep their reserve up. So they're really their biggest assets, this massive $210 trillion pile of yuan that they've printed. And so I'm not really believing they're going to invest trillions of dollars to cover the cost of Hong Kong. And here's another look crashing in terms of growth, and will quite likely be sure is that China is slowing its imports, which they're doing so, especially with what's happened recently. And because they're slowing down import growth, its export growth has flatlined. So really China's slowdown was going to cause this crash even before this big pandemic broke out. This will just be the prick to the bubble. Okay, so what happened to China? Well, they were building skyscrapers, bridges, tunnels, trains, houses. And they were funding it by just printing more of their own money and then printing out these huge GDP numbers, forcing each different region to hit GDP goals, which was created by just having fixed prices. So it wasn't a real open economy. And by 2015, this was clearly not working, as they weren't collecting income from all their investments. And so the debt was rising, but the income was not increasing. So trillions of dollars wasted. And this was the bubble we were initially worried about popping the world economy. And so this has actually had a very negative effect on all of their trading partners. And really every currency on the planet has weakened against the dollar. And even with us printing trillions, we're still seeing weakness in emerging markets and other currencies. So these are the top traded currencies. And note that the Hong Kong dollar is right up there with the renminbi or the yuan. And so most of that trading is really just between China and Hong Kong, as the rich Chinese convert to the Hong Kong dollar legally, and then they can get out to the US dollar. But other important currencies have been relatively weak against the dollar. And the lower you go down the list, the weaker they've been. There's a few exceptions where they're pegged to the dollar, such as the Singapore dollar. I believe it's the Swede has a peg to our dollar. And then the Hong Kong dollar. So we can see visually the euro versus the USD has been losing value over the last 2 decades. Japanese yen, supposed to be a safe haven currency, had a huge depreciation, gaining some strength recently. British pound overall has been losing value. And again, these charts are not updated with the recent currency moves. So it's actually seen a lot of weakness in most currencies recently. Australian dollar, as we've been talking about daily, a great proxy to China to understand the health of China's real economy, not what they report. Canadian dollar losing tremendous value. Swiss franc flat, designed to just hold value against the dollar. Chinese yuan has lost value as tariffs have forced them to devalue to offset costs for importers from the United States. New Zealand dollar losing value. Swedish krona losing value. South Korean won flat. Singapore dollar flat. Norwegian dollar down 45%. Mexico peso down 37%. Indian rupee down 36%. Russian ruble down 57. There's probably a lot of currencies we could bet down on. The weaker the currency, the better. But the one I like the most is this Hong Kong dollar, because of the potential return against the risk is the best risk reward ratio I've ever seen, period. Okay, so the general theme is that every currency is down significantly, and the smaller the value of that currency, the more it's down. That's because everybody has their debt denominated in dollars, and they're feeling the pressure from China. China's imports have slowed, so all of the surrounding countries tied to China are slowing down. And so these debts are becoming due. Also, money has been aggressively leaving China as well as Hong Kong, despite strict capital controls. So everybody knows that the Chinese currency is not worth what they say it's worth, and they try to get out every chance possible. Bond yields in Hong Kong were crashing for 2 decades, signaling problems. So you can see that. Again, bond yields crash when times are bad, not when they're good. GDP was bad last year. It's even worse this year. And so the most recent trends for it are much worse. Jose says, is it okay to do the trade from E-Trade? Yes, sir. Yeah, that's fine. Hong Kong's real estate's most expensive on the planet. So we can see just these outrageous real estate values, anywhere from 10,000 a square foot to as high as, I think the highest print is 21,000 in the central Western district. So this is really a valuable asset to China, but it's a weakness because it can easily be attacked by United States, UK. So again, if we start to see real estate crash, stock market crash, restrictions to capital flows to Hong Kong, this is a disaster that I don't believe China will want to fund. And that's what we're hoping for with this trade. Real estate prices grew 300% in the past 2 decades, but wages only grew 54%. So you can understand why the population of Hong Kong is furious. Their cost of living has gone up, but their income has remained relatively flat. There's been lots of blood, lots of protests, and they're so upset. They don't even care about the virus. They're still going out and protesting. They're still getting shot in the streets. The protesters are all in jail. New protesters arrive. So I would have suspected that these people would have become too scared to go out, but we're still seeing them out rioting. For a little while, they're just pissed that Chinese could come into Hong Kong, but really they're back to their original demands. And again, it's designed to match the US dollar. So there's not so much risk that would go against us. Really, the cost of holding the position is what's at risk here. So if the Hong Kong dollar were to lose 10% in value, not including our cost to hold this position, we could make 11%. Who cares about that? If it lost 25% of its value, we're making 33%. Now we're only risking around 1 to 2% max of our total portfolio in this trade because there's so many opportunities. I don't want to miss. It's good to have a good set of trades with low risk and high return when we're playing plays like this. So really, I'm not super excited about a 30% return, a 50% return, or 100% return. That'd be great. Can't complain about something like that. And this was a law that was being passed in October. Just a lot of things coming out against China right now. If it lost 90%, we make a 900% return. Now we're talking. So we could add with 1 to 2%, we could be adding 9 to 18% to our total return in the course of a year. Now this gets attractive. But if it loses 99% of its value, then you return 9,900%. So we could literally double our entire account with 1% of our portfolio if this were to occur. Now you understand why you want to put this trade on. So I want to give everybody plenty of time. I don't think we need to place it today. If you did place it today, I don't think you have very much risk. But yeah, $100,000 could turn into 10 million with this trade. And the risk to the downside is relatively minimal. We literally need China to come out and say they're willing to pay more for a Hong Kong dollar than $1. So that would just drain their reserves so fast, would make 0 sense. So I don't see them making that action. Hong Kong dollar hasn't budged for the last decade. Will it anytime soon? So I think we understand why it could. Here's a look at the Hong Kong dollar. And again, this is just 7.75 to 7.8. So that's basically flat the whole time. Okay, so this analysis was hoping that we have geopolitical tensions, that it wouldn't happen until after the election, when phase 2 is going to be pushed upon China. But obviously things have changed rapidly. So let's skip through those. Okay, the cost is $1,000 to have one contract that represents $10,000 position. You're going to pay 20 cents a day to hold the position. Randy says, what's the FXI put? I'll pull that up for you. I'll pull that up after I go through the Hong Kong trade. It's in the trade alert today. There's the 31 strike, I think November 20th, right around the election on FXI. And it was, I'll pull it up so we can look at that. Okay, so cost per $1,000. So you only have to put $1,000 up, and this will give you a $10,000 cash position betting down on Hong Kong. You're going to pay 19 cents a day to hold that position. This means if you had $100,000 account, you could transfer. Now, I'm not suggesting this large of a position. And again, this is one you're going to probably sit on with no return. And then all of a sudden it either works or it doesn't. So you could sit there and pay 20 cents a day per 1,000 invested with no action for a long, long time. And then all of a sudden you hit it big. So if you want to really try to knock this out of the ballpark, you're going to have to probably not follow other trades to go beyond my position, because we're getting to the point where we have most of our capital being assigned to one trade or another. And so we could add on this. Right now, I've only issued to get $1,500 per 75K into your Forex account ready for the trade. If you want to place a trade, I don't think it's a problem to do it now, but I'll likely put it on next week. Okay, so for a $10,000 position, you would pay $1.90, and that would cost you $700 a year to hold this position. If it did strengthen a little bit with the tiny moves we have seen in fluctuation, you could lose an additional $1,000 based on the previous fluctuations we just looked at beyond that 1,700. So on a $10,000 position, we're looking at risking, rather this was on a $100,000 position. We'd be looking at a risk of 1.7 or $1,700. And remember, they're giving you 10-to-1 leverage on that contract. Okay, so most likely it'll just stay flat, and you're really risking about 0.7% per year. And that's to have a $10,000 investment in it. That's leveraged 10 times. So $100,000 capital. Okay, Ernest Hemingway, how did you go bankrupt? 2 ways: gradually, then suddenly. So I think we can see Hong Kong's gradually going bankrupt, but suddenly the price is paid. Michael asked if you could lose more than 100%. No, you would get sold out of the position. So that extra $500 is in case anything happens that you have some extra cash in there to cover it for an additional. But it's just not designed to go against us. It would be extremely, extremely shocking for us to lose anything outside of the swap cost. But yeah, you'll get automatically exited in a Forex position if it goes against you. So this could be boring. We could watch Hong Kong melting away. We make nothing. Months and months go on, and then suddenly an overnight change happens, and then we get the potential payout. And again, this is not a trade you can jump into. It's going to be likely a quick fix and a sudden change. Okay, so let's look at the Thinkorswim phone app's a great way to place Forex trades, not this trader app. They actually deleted this app when Schwab bought them out. Here's your trade. It's the USD HKD pair. In the module, you can click on it, which will be at the bottom below the replay. We'll have the link so you can see all these screenshots on a web page for those of you who are new to Forex. So you got to get some cash moved from your stock option account to your Forex account. You literally have to move that from the online portal, or you can call them. Once it's cleared, then you can place these trades. And so with $1,500 entering, we're going to be looking at putting on one mini contract per 75,000 to start. Just because there's so many trades, I don't want us to have all of our cash on this when there could be some quicker moves happening before then. On the other hand, we don't want to miss this if it snaps. So we click the trade button up in the top right. This is the opposite of that futures trade. So the nomenclature is the exact opposite. So we're going to be buying. Okay, so you can control that. Per 10,000, you're going to need 1,000 in there, but we're saying to put 1,500 in. I would do a market order. This is a well-traded product. So you'll get a good price. You won't have to sit there and screw around with the bid and ask. If you're more advanced, then feel free, but do market order. Again, we're buying one of these per 75K. So you're going to put 1,500 in. You're only going to use 1,000. And then you hit send. That's your confirmation. Here's what it'll look like in your filled tab. So you'll see that you're long the USD Hong Kong. With $1,000, I was able to pick up $10,000 position. So 10-to-1 leverage. And if you go to the position tab, you can see it right here. This is the order tab. So you'll see it show up. Once it's complete, you'll see it filled. You can find it in the position tab right here and it's open. So again, it's probably going to sit there being flat, just eating up the 19 cents a day is going to be really your risk in this one. Now, could it possibly go against us? Maybe, but again, the maximum risk will be what's in the Forex account in that position. They'll just exit it. But again, I highly doubt that China is going to want to sit there and cash out everybody who wants to exit the Hong Kong dollar. And if they made it convert at a better price than it does today, everybody and their mom's going to want to get out of that Hong Kong dollar for a profit. So there's just really, it would be ludicrous for that to happen. Now, when it comes to close it, you can just go to your open position, click on it, and hit the close button or sell. So super easy, especially with the Thinkorswim phone app. Now, if you're using the Thinkorswim desktop, that's a much more complex beast, and I really don't recommend that. The Thinkorswim phone app's beautiful. It's easy. So you hit sell, it'll pull up the sell. I would go to, again, a market order. And it'll have a negative, so we're selling it. And hit the confirm, send. Here's your order confirmation. And you can see it's filled. Now it'll calculate what you made or lost. Here's some math. I think for you guys, probably, I wouldn't worry about it so much. I'll tell you when to buy and when to sell. I think it's fine to put the trade on at any point now. So I'll officially likely put it in my track record coming Tuesday. Just want to give everybody plenty of time to prepare before I do it, so you don't feel like you're being rushed. And again, I'm recommending one mini per 75,000. So it's $1,000 a margin to have a $10,000 position. And this is a beautiful setup. And basically the idea is that we're buying the Hong Kong dollar in the future and we're selling it at today's rate. So we're hoping in the future we can buy it for basically nothing because it goes to a value of 0. Yes, we did put on the FXI puts today. That was our big trade today. Yep. And about just over 1% total risk in our portfolio on that through November. So a lot of time premium on that. So I'm not going to go through this math. Basically right now it's about 12 cents for one Hong Kong dollar. We're going to go into the future and buy them for maybe a penny and then come back to present day and sell it for 12. That's really the mechanism that's happening here. Or we're going to go into the future and buy it for nothing because it goes to value of 0 and cash out the 12 cents. That's really the idea here. Okay, let's go ahead and do Q&A. Let me pull up that trailer just because I did see a few questions on that. I would use, Barry, and if you want to talk, go ahead and unmute your mic. Ryan can help me get the crowd speaking. Barry, go ahead.
Yeah, so I just want to know how I should execute that trade. My broker doesn't allow currency trading, so I thought I would open a Forex account.
I would go to TD Ameritrade.
Okay.
And apply for the Forex account and then download the Thinkorswim phone app. And then you can follow my screenshots exactly. And I love Thinkorswim's. I love TD Ameritrade as a company. I think that's your best bet by far.
Okay. And are you gonna, I placed all those trades this morning, except I missed the FXI.
Okay, let me pull that up.
Thanks.
Yeah, you're welcome. Okay, there you go. Oop. I guess the document does a little bit better. Let me pull up the actual trade doc. So this trade really goes hand in hand with the Hong Kong trade.
I posted in the chat as well.
Okay, great. Thanks, Ryan. Antonio, please.
Hey, Jason, would you put up the TD Ameritrade, the TOS mobile shot again so I could take a screenshot of it?
Yes, sir. And Ryan, can we get the bootcamp link to this module too, so I can pull up that page for everybody too? And then you guys could save that link.
Sure.
So that's step one. And again, the web page I have has this all screenshotted, so you can just pull it up. There's step two. And again, that's going to require $1,000 margin per mini contract. So it's $10,000. You're basically buying, what you're saying here is you're going to sell $10,000 of USD at the current exchange rate. And then you're buying, what we're doing here is we're buying the Hong Kong dollar in the future whenever we close a trade, and we're selling it at today's exchange rate. So today's exchange rate is something like 12 cents for one Hong Kong dollar. And in the future, we're hoping we can buy that Hong Kong dollar for significantly less. And the less it costs, the cheaper it'll be. Let me pull up this webpage. I think we're about to roll out our username password system too.
Oh yeah.
Oh yeah, Ryan's been working hard on that. So
And I put that link in the chat. You can't click it. So if you just want to copy paste it into your browser, it'll open up for you.
Beautiful Hong Kong right there. Look at those skyscrapers.
Quite the skyline.
Yeah. So we got all, now it's not the trader app. They discontinued that when Schwab bought it. Randy says, is Yang the same as FXI? Yes, sir. That's the same play. Less leverage. It's still leverage, but it's not as leveraged as our put. The FXI position is related to the Forex trade, but not necessarily tied. I'll tell you this, if the Forex trade profits, I'd expect FXI trade to profit before the Forex trade, but they're highly correlated and beneficial to one another. One's the stock market, one's the currency market. So you can see we have this laid out, but again, it's the Thinkorswim app you're going to want, not the trader app. Find the currency pair, USD Hong Kong. It'll pull up a chart. You want to hit the trade button in the top right. I would do a market order, make life easy. You want to buy, not sell. Now in the futures trade is the exact opposite. If you want to be a ballsy guy, this is a great trade because of the low risk. That's what's really beautiful about this. But if you want to save some ammo for all the other trading opportunities, then right now I'm looking at really one of these contracts per 75,000 with a little bit of extra cash. So you have 500 extra in there. And again, you're going to have to do even lots. So Michael says he's never traded Forex before. Yeah, this is a unique trade. So my specialty is really understanding the relationship between US, China, and then the relationship between the stock bond market. So I don't go out and do a lot of Forex trading. In fact, this is the first, we've been teasing people about this for, gosh, since the trade war began really. And my expectation was that we'd short the Chinese currency first and that this would come out in second, but now it looks clearly to be the opposite.
Hey,
So
Jason.
hey, Scott.
Hey, 1 per 75,000. So when I see the, I want to pull the trigger on this. And I was going to ask you, you said we could do it, but you said you're also going to send an alert. So do you recommend we go ahead today?
Yeah, I think now's the time. I think we have all the dominoes lining up. Now I do anticipate we're gonna have to sit on this for several months,
Okay.
maybe a year. So we understand the risk. So you'd be losing, the cost I was looking at was, I believe 700, but that would be to have 10 of these. So it'd be 100,000 position. So
Well,
to buy 10,000, you only have to put 1,000 in.
okay. Well, that was so when I see, so what will that number be there for me for 75K? Will it be a 1?
It'll
The
be
quantity.
10,000. Yep. So you
It will
need to put $1,000 into your Forex account,
Okay.
and then you buy 10,000 of you're selling,
Okay.
you're basically selling 10,000 Hong Kong dollars today at the current exchange rate. And then when we close this, we're going to be buying the Hong Kong dollar. And our hope is that we can buy that Hong Kong dollar for nothing, because it gets dissolved.
Okay.
So we
Got
just
it.
keep we have the maximum return. Now, if we're
Okay.
able to get it for 6 cents, and we make 100% return. Or it just trades flat and nothing happens, and we sit there and eat the swap cost, which is 19 cents per day. So $70 a year per contract. So it's really a beautiful trade. And this is all kudos to Kyle Bass. And so
I like these long-term positions. I like having a vision for just a long-term scenario, which this one is, and just watch it unfold, and you can kind of sit back and keep up with the happenings.
If we put 1% on this and it is dissolved, we double our entire account with 1%. And that 1% is really not at risk. I mean, we're going to lose a small, $70 a year to hold that position.
Mm-hmm.
Yeah. So, good question, Karen. So if it says 10,000, that means one mini contract, and that will cost you $1,000.
Yeah.
Now we're putting 1,500 in there, so we have a little bit of extra margin in our Forex, but I don't think it's necessary. I think you'd be quite likely fine with just put 1,500 in, buy one contract per 75K, and you really have nothing to worry about. So again, this is what you would do per $75,000 is one of these mini contracts, which again only requires $1,000 of margin. So we have a little buffer. If it somehow depreciated 10% against us, well, we have $500 extra sitting in there. But again, that's never happened in the history of this peg. It's budged up and down, tiny, minuscule amounts. And again, for this to go against us, what would have to happen is China says, you know what, we're going to pay out more than 12 cents for the Hong Kong dollar. So everybody and their mom would dump the 1.3 trillion in Hong Kong dollars and make a profit from where they were just previously. So that would dump their reserve, which again, they need to protect. Let's do Karen, Jack, and then Antonio, who all have their hands raised.
Okay, so I'm still a little bit confused. I think we just keep going a little bit around, and I wrote what you just said, which was good. One mini contract equals $1,000. That's good. That's what I needed to understand, because it was just.
Well, no, one mini contract costs 10,000 in costs 1,000 in margin, but it represents 10,000 in currency. So they're giving us 10-to-1 leverage.
Okay, say that one more time. I'm gonna write this down. All right, because it's.
Okay, so yeah, we want to deposit $1,500 to buy one of what you see on the screen, and that's going to use $1,000 of your 1,500.
Okay. Then it uses. Okay, so but when you're then going back into saying, so per your 7,500, I mean 75. I'm sorry, I'm getting confused. Maybe
Yeah, per 75,000, you want to do one of these. So
okay.
even though it says 10,000, it only costs you 1,000 to put that on.
Okay.
In fact, I think it costs less than that, but I don't want to over leverage us. So they give you a lot of leverage.
I see.
The Forex market, because it usually moves in tiny decimal points, they
Right.
traders like to have leverage to make it worth their while. And so that's why you get so much leverage in that play.
All right. And since, well, I'm trying to figure this out for myself because I'm going to have to open up a separate account to do this, obviously, and everything's not going in there. So I'm adding cash into a new account based on what my master account is, which is, which has the per 75,000, blah, blah, blah. So I'm,
yeah. So if we were doing, let's say, for example, a $300,000 portfolio, then we would buy 4 of these and we need to put in $6,000, but we're only putting at risk up front 4,000. We're only really using 4,000 of it.
Yeah,
So-
now that's what I thought when we first did this months ago. And for some reason, it's just it's gotten more confusing, I think, the longer we went. Okay, good.
Another
'cause I did
trade
go-
is the exact opposite nomenclature, and those are in larger lot sizes. Those are in 100,000 lots.
Right, right. No,
So
I
this
went
is
through this before because I was trying to figure it all out and I got myself thoroughly confused.
So if you guys do have money in Interactive Brokers, they do this trade perfectly fine. So you could use that.
Okay.
But I don't see us shorting the Chinese currency in the near future. I really think this is the trade that makes the most sense. And what's
Yeah,
neat
that's
is
what I was
it's
saying.
the low risk and the high return that makes this so attractive.
And you think these are the only 2 platforms? I mean, like, for instance, like E-Trade, did you say something about that a little bit ago? Or no, they don't do it. They don't do the Forex.
I believe E-Trade does.
Jose, I think, said they didn't in the chat.
Oh, okay. My favorite broker is by far TD Ameritrade with the
Right.
Thinkorswim phone app. And if you get that, you can follow this on your phone. It takes literally just
Yeah,
couple
it looks
clicks.
easy that way. I'm just trying to figure out what's best for
Now the Chinese trade is
multiple
really
things.
a long-term trade, but that one can easily go against us and it's much more difficult. So that one we needed to time with tariffs. And we want to see actions on the Fed that are strengthening. Now it is funny that with everything they've done to weaken the dollar, it's still, what's DXY? It's still at 99.5. So they're not achieving a weak dollar. Which
Okay, well, I appreciate that.
emerging
Thank
markets,
you.
emerging markets are having trouble. Yep. Let's do Jack.
Hi. So I have 2 questions. One question is that going back to what you're saying, that what happened if Hong Kong dollars drop to almost close to 0, there's no value in it. Doesn't that making unsettled on even more on citizen wise? You're going to have riots, chaos.
Mm-hmm. Yeah.
That would be happening, right? Okay. Do you think that Chinese government will let that happen?
I think that the Chinese government is going to let go of Hong Kong because sanctions are placed on it by the US.
I see.
So right now, Hong Kong's treated, it was sold from the British to the Chinese, but they had to keep autonomy. I believe it's until 2040 or 2050, but slowly but surely, China has done everything they can to really take those rights away. So that's one of the reasons why the Hong Kongers are revolting. But what good does Hong Kong do for China? It really has 2 purposes. One, it acts as a financial hub. So that's why it's the most expensive real estate in the world, because China has been the fastest growing country for the last 3 decades. So they've raised all their capital, not in Shanghai, but really all the money flow has been dealt through Hong Kong because people like its legal system, which is more democratic in nature. But slowly but surely, China's been really turning it into a puppet without all these rights. So we got Hong Kongers pissed off. At the same time, real estate has gone up 300%. So the cost of living is really multiplied, but their income's only gone up by 50%. So people are pissed off in Hong Kong. So what are some of the recent things that China's done? Now they're creating laws where they can just go literally pick you up off the streets in Hong Kong and take you over to China to go through the Chinese judicial system instead of the Hong Kong judicial system. There's also a lot of Americans living in Hong Kong. And so the big picture is we're having a divorce with China. It's going to get ugly. And Hong Kong is probably going to get ripped in half during this, and that's the big play. So yeah, right now we can sell our Hong Kongs for 12 cents.
Okay. So
And we want to buy it for a penny or less in the future. So it seems weird to sell today and buy tomorrow, but that's really the end game here.
So if do you think that America would be a favor to them for letting go Hong Kong dollars to let it drop? Is it good for America, or is it against America in terms of psychologically Hong Kong people will say, hey, this is America, let us stand here with China. At this moment, all these Hong Kongese are pro on US government.
Yeah, so my theory is that we'll be at war with China for the coming decades as we decouple. And really it came down to America says, hey, what you're doing is not fair. You're acting as though your country is a single company and you're taking over markets that we can't compete with. So you're taking a $13 trillion economy, you're taxing your population, who you censor, who just the worst can, it's not, there's no free speech. There's really no law. So what is China do? They have 1 billion people that sit there and work for $3.50 an hour, manufacturing iPhones and things of that nature. And they're printing massive, massive profits. But do those profits go to the people? No, they make $3.50 an hour and then they get taxed at a 70% rate. So all the money flows to probably about 10 million extremely rich, extremely concentrated, very disciplined leaders of China who they're smart. They're obviously what they're doing has a good plan in mind. It perhaps doesn't benefit the billion people who you could call their slave labor, but for the overlords of China, the Communist Party, they're becoming extremely, extremely rich.
I see. Okay, second question. On margin on Forex, do they have any expiration?
No. You have a swap cost. So we're going to be, this trade right here costs 19 cents per day to hold.
Okay.
Murray says, so Murray, for every, so Murray has, I think, what, like 1.5 million now on this? So let's see. Let me see what you would do. So we're going to take 1.5 million, divide by 75,000. So you'd be wanting 20 of these. So you multiply that by 20, and you would want to deposit $30,000 into your TD Ameritrade. And then you would jump that up 20 times. So you're only going to be putting to work 20,000 out of the 30. So you have a room of buffer and also some extra cash ready to increase position. So anybody just with 75,000, you're not going to have enough money to buy 2 of these, right? But if you have $150,000, we'll be able to go up to 2. So we're essentially investing 2/3 of what I'm looking to maximum put into this. So once I think we're even closer to the trigger, I might tell you to put that last little piece in there. So you would want to increase that to a $200,000 position, and you're going to need $20,000 to do it. But I'd put an additional 10,000 in there for either increasing position or just a buffer. And that would be based on a $1.5 million portfolio. Randy says he thinks Hong Kong will do better. Why? Well, no, because Hong Kong's only reason to even exist is to raise money for China. So no, China is the lifeline for Hong Kong. If Hong Kong becomes disconnected to China, their entire economy is going to crash. And yeah. So no, I don't think Hong Kong's going to do better. Everything's overvalued. And I mean, it's the most expensive real estate in the world. And everything about their economy has just been cratering for quite some time now. Let's do Antonio and then Kathleen.
Yeah, Jason, so each time we buy one of these contracts, it's going to cost 19 cents a day. So if I buy 4 of them, it's 19 cents times 4, correct?
Yes, sir.
Okay. Also, I have a comment about the spreadsheet. When we close options buying on the, for instance, metals commodities position,
Mm-hmm.
and you put you enter the number of contracts, like I said, 4 GDX contracts for today, the puts that you suggested.
Uh-huh.
It doesn't multiply when you close the position out. It doesn't multiply by the 4 contracts. It just does 1.
Nope. So you can see the formula, see how it's highlighted all the cells. So there's the number of contracts right there.
Okay.
But maybe that formula got broke on your sheet. You're going to get a brand new sheet tomorrow. And then next Thursday, we're going to cover filling out our spreadsheet detail. So I can look at your spreadsheet individually in that next webinar. And
Yeah, okay. I put a note under type, so you'll see it there.
but yeah, we can see the formula right there. So it absolutely
Yeah,
does.
mine is broke is what it is.
Okay. So yeah, that can happen if you accidentally delete the underlying formula that hides under here. So you can see how this has a 0 right now.
Yeah.
So if that got broke, then that could be the reason.
And also need to edit your docs inside of Google Drive.
Oh
Okay.
yeah.
Instead of making copies of them.
Yeah, you really want to use the Google spreadsheet instead of making.
Yeah, what I was doing was making a copy, but
yeah, so that spreadsheet is your unique spreadsheet. So the one we issue you tomorrow morning, use that. Don't make a copy, because in the future we're making upgrades to software, so I could actually update your spreadsheet and add features instead of having to have you convert. So right now we're gonna have to take our old trades and move them to the new spreadsheet. So that's going to be what we're going to learn Thursday next week, is we're going to sit there and move the trades over together. But in the future, I'll be able to flow updates to your spreadsheet without you touching it. So we're slowly but surely adding to our technology for the platform.
Yeah, you're going to keep the same title?
Yes, I believe it will have the same title. So the way you'll find is you go to drive.google, shared with me, and it'll be a brand new, here's the new one right here that I just got, which I just started to fill out.
And you can edit your title if you want to, but
yeah, that's what I did last time. I just edited the title just to put the date of the last change. So
yeah, so you can do that. My nickname's JJ, by the way, Jason James.
Okay. All right, thank you.
Yeah, very good question. Let's do Kathleen. And there's actually 2 videos on this, guys. So we have a lot of content. I did an update on right after the trade deal was signed. What a load of crap. I bet you they don't buy anything.
I finally found my mic.
Hey, Kathleen, how's it going?
It's going great. So this daily cost, does it automatically get taken out of our account, or are we making some action? How does that work?
Yeah, that extra $500 we have sitting in there will cover those costs.
It's just an automatic thing that they do. Okay.
Yeah, so that's why I'm having you put a little extra in so that we have that buffer.
Okay, thanks.
You're very welcome. And probably the extra 500 is probably overkill. You could probably get away with 1,100 in there and be fine if you wanted to keep cash in a different account than that. Yeah, but in my thought, I was like, well, if we do decide to double if you had 150,000 following this, then you'd have enough capital to go to one extra mini. And here's the trade screen again. Scotty.
Hey, so yeah, I'm with E-Trade, and I'm like, I know I've seen Forex in here, and it wasn't there. So I texted with a live rep, and they discontinued the service about 4 years ago.
Oh man.
So that's okay, because I staged up Interactive Brokers. I've got that account set up. I just don't have funds in there, so I'll go to Interactive. Now I could go to TD. I always wanted to go Thinkorswim just because of how smooth their options are. But I think I'm going to, well, here's my question. I think I'm going to stick with, rather than open up TD, I think I'll stick with Interactive because of their low margin rates. I could never get E-Trade off of the 6%.
Good point. Yeah.
So what do you think? I mean, which would you do? Or what do you think?
IB does all the trades that TD Ameritrade does and more, and they will certainly loan you money at a lower rate. So
Okay.
I like Interactive Brokers. In
All right.
this case, if you don't want to learn how to place all the, just call in your order, because it's a one. This is a one-time lifetime trade. We're going to put it on, and then we're eventually going to pull it off, and then that's it.
Yes, I'm going to make them earn their
work
that, for my account.
Yeah, and after that, we want to short the Chinese currency. So if you have it at IB, you'll be set to jet.
Okay.
Right here, Murray, is the symbol. So I promised Murray that he needed to join the boot camp because we're going to short the Chinese currency. And then kept telling him, don't do it yet, don't do it yet. So we're finally getting to do it, huh, Murray? And it's the Hong Kong trade instead of the yuan. So good for you for being on the webinar today and getting on top of it. Proud of you. Let's see, Mark Stoley, and then Oscar.
Hey, yeah. So I wonder if we're going to see that illiquidity market on close jump today.
Oh, on the SPY?
Yeah. We've seen that for a couple times this week, it seems like.
Do you see that zero hedge piece from Nomura Bank trying to build a timeline for when the CTAs will finish their mindless buying spree? He's got a target date of April 22nd. He says, unless we get fundamental buyers buying by April 22nd, this will run out of fuel.
Yeah, I saw that.
That's a good art. Nomura's pretty good at short-term predictions. They're pretty darn good about it. I've been very impressed. And oftentimes when I have different fundamental analysis and go against theirs, we see at least a short-term move against us. Not necessarily a long-term move against us, but yeah, I think time's not on your side to be playing a stock rally now. Thanks, Mark. Oscar? Boy, I don't know how Oscar got any work done today. We've kept him busy, man. 4 hours of webinars, huh?
No, I've been in and out. That's why I keep you in mute, because I don't want you hearing everything that goes on. I just want to make sure on Interactive Brokers, I'd be able to do this the same way as the Ameritrade trade.
Yes, sir. Exact same in terms of the labeling. But yeah, because the pair is flipped for the futures market, the terminology is the exact opposite if we wanted to short the yuan. But I don't see us doing that trade right now.
So we're going to go long this mechanism, the US dollar versus Hong Kong.
Yeah, so we're basically saying that we want to sell the Hong Kong dollar for US dollars today, and we want to buy the Hong Kong dollars in the future. And we're hoping we can buy those for cheap and then sell them at today's generous 12 cents per Hong Kong dollar. This is the way to think about it. Yes, sir. Thank you. And yeah, we've really been patient to place a trade like this. So was waiting to see Trump change his tune because, you know, the last few weeks, I saw him changing the tune about the effects of the virus from, you know, it's nothing to worry about. You're not going to feel anything to this thing is nasty. It's devilish. It's awful. It's horrific. The WHO screwed this up. They're all about China. China should have told us. You know, so we've slowly seen him change the tune on the virus. And now we're starting to see him say, well, China's not meeting the trade agreement. He keeps boasting about how he signed the best trade deal in history and China's going to support us now. So that would be interesting. Imagine China did do this on purpose, but they made sure to make good on the phase 1 trade deal. So it'd be hard politically for us to go after them while we suffer this economic blow. So I could see that. Although so far it seems like they've barely made good on anything. In fact, a lot of the farmers are getting notes that they need to shut down operations. It looks like there's some odd things happening that I can't quite explain, but a lot of consolidation in agricultural right now. I'm thinking Trump wants to see them fail to make good on the phase 1 deal. But I think regardless, that's going to be his pitch for the election, is that he's tough on China. He's bringing back the jobs. And he's going to punish China for what they've done to us and failing to make good on their phase 1 trade deal. Phase 2 just couldn't happen. There's no way China, not with the Communist Party in charge. Now, the people of China would probably love a phase 2 and create a democracy and have rights, which is obviously what they wanted at Tiananmen Square when they all got ran down and the world didn't do anything for them. But with the Communist Party in charge, there's no way they're going to change the structure. They're making $1 trillion a month. They're taxing that profit at 70%, and then they're using that to concentrate and take over key industries of the future. So this would absolutely put China ahead of US if allowed to go unabated. So I don't think that they will allow that. But the catch is China's good at buying out politicians. That's really the weakness of a democracy, is that if you get someone too rich, they come in and buy out so many people that have so much pull in your political system, as well as bribes to the corporations who want to go get into China's huge market. Mark and Oscar, you go ahead and unmute both, Ryan.
I just saw a quick news blurb that Kudlow says moving to 100% immediate expensing for American companies would lure firms back from China to US.
Nice. Yeah. Writing's been on the wall for quite some time. Go ahead, Oscar.
No, Jason, I didn't have anything to add.
Oh, okay.
Thank you.
No, my pleasure. All right, guys. Any last questions? We've kept you busy for 4 hours straight, so appreciate everybody. And you know what? I'll never forget. Last time I was doing this was just with me and Donald Dickey. So our crew's growing, and it's a pleasure to service you guys. Michael, go ahead.
Jason, in your video presentation, well, the document, can you hear me first of all?
Yes, sir.
Okay. The second video, could you go back to that? I'd like to capture that guy's name. Not in this document. It was in a
You want my
Google Docs.
slideshow?
Yeah, that slideshow document.
And I can even give you the slideshow too if you want.
Oh, that'd be perfect. That's fine. That'll be quick.
Yes, there's a lot of really good interviews about this. In fact, in our bootcamp daily updates, I have a lot of them, but Real Vision has some really good interviews with Kyle Bass about this trade. And
so it was, okay, so the first video, or number one, was, these were homework, watch the Pomp podcasts. Number 2 was Somebody. Number 3 was Art Berman with Macro Voices. But I didn't catch who number 2 was.
Oh, the videos from this week?
Yeah, from just the start of this presentation.
Sure. Let me pull that up.
Okay.
So on
I'll tell you what,
Tuesday, yeah, I keep you guys busy, huh?
wow.
I'd say 1/20th of the footage I watched in the last week to highlight these for you.
So, yeah.
So I like to do my studying. Now, it doesn't mean we're always right all the time, but okay. So this guy was new to me. Tom Sharp pointed out this podcast.
Yeah, I got that.
Jumped into it. Excellent information. So shout out to Tom.
The
Just
second
posted
one, there it is. Yep.
Yeah, just
Okay.
Less than other experts, but Nomura, which is I think that's about an hour and a half. This is I did a book where I think that's a 30-minute interview. With Jim Rogers. Now again, it's going to be a 2 to 3 hour video daily. I think it's mainly designed to get degrees in this field. Was a 101 class video, but again, just I delete videos because on the weekends. Now, big nerd, science nerd. He has to totally understand how clueless. Oscar, thanks for the Easter wishes, and you,
Jason, who?
This guy, I don't even know his name. I first started following him just for the black holes. So we'd always speculated that black holes exist and used physics. They must, but we never had a plan where the world created basically the entire Earth into a telescope, like putting all these telescopes around the globe and turning it into. And they got, so he was covering that as a big of, I believe, last summer. That's when I first became turned on to him. He came out with when the sun is spitting out these big explosions on the surface of the sun, and it's quite a repetitive population density pollution the last 30 years plus to bioengineer and our industry. Small things have really exploded, plus investment into pandemics hit. It's so serious for me to understand that viruses float up in the atmosphere. We have no clue what the origin of viruses are, including in your human that they might very be coming from outer space. So 10-minute video, but it was interesting. This is in the weekly study. Every weekly has great content, so you can just go back in good content to watch, to keep busy. But I think if you just jump to where you're at currently, here's John predicting the rising yields and nice growth for emerging markets. Boy, did that turn ugly quick. I'm sure he flipped the switch too, but he's since